The research team met earlier in the week to discuss the implications of Brexit and where we see the opportunities, and we reviewed our high conviction list for the month. Now, we certainly think it's thrown up a lot of interesting opportunities. We highlighted on earlier in the week that we thought that the markets would overreact. We are seeing signs now that the market is bouncing back, which gives you some idea of the amount of cash waiting on the sidelines. We did think that markets were getting a little bit elevated and was almost waiting for an excuse to sell off and pull back. We do think that central banks ultimately will be the backstop, and that financial conditions, if it became more volatile, that central banks will come in and reassure the markets, supporting equity markets and asset markets around the world. We did put out a piece earlier in the week just discussing the implications for Brexit, what the possible scenarios are and what some of the risks are. So I encourage you to have a look on our website, get a hold of that research note, or speak to your advisor about that. When this washes over, what we think will happen, this will rank alongside the Brexit scare that we had last year, or the European sovereign debt crisis. So certainly think whilst it is a risk, it's not going to eventuate and play out like a full economic crisis. So the sell-off, we think, has created several opportunities. Firstly, I'd like to reiterate our high conviction list. Research team got together to discuss the list, and we certainly think the list, bar a few changes, still represents our best ideas, and on a risk-adjusted return basis for the next 12 months, this is where we'd like to put our money. So in terms of changes this month, we've added BHP to the list. BHP has pulled back quite some way. It's now trading at a low in terms of its recent trading range. It's got enormous leverage to the oil price, and also we just see the stock as reasonably immune to whatever scenario plays out in terms of Brexit. So we do like BHP on a 12-month basis. We've also added SIQ, which is Smart Group, to the list. We think that the company has been significantly de-risked now that there's bipartisan support for essentially icing any changes to the fringe benefit tax on novated lease arrangements. The company's seen very good organic growth, and the 3 recent contract wins also bodes well for earnings in the near future. So certainly like that stock. We've removed a number of stocks from the list this month. Firstly, we've removed CYBG on the back of our Analyst downgrade recently, downgrading the stock from an add to a hold. We just think there's a number of headwinds for the UK economy. It is a domestically focused bank in that it focuses purely on the UK. So given the risk around the economy and the uncertainty in the business investment environment, we certainly think there's risk that unemployment may tick higher. Also, credit growth may be a bit lower than anticipated. So when we consider the change in the macro environment, it's difficult to be high conviction with the stock at this point. We do still like the cost out story, and we certainly think management are ticking the right boxes there. But for now, just given the macro risks, we are removing it from the list. The other stock we're removing this month is Vitaco. While we like the prospects for the company longer term, our analyst points out that FY17 is going to be a big reinvestment year for the company. Its Chinese strategy, as well as the capital that's being deployed into building up the company in terms of its capability. So we certainly think that there may be some near-term ceiling to earnings. In the sector, we much prefer Bellamy's, so that is also in the high conviction list. We just see too many risks at this stage, and also obviously the Chinese regulatory changes pose a bit of a headwind to the sector as a whole, which may temper the upside for Vitaco. So much prefer Bellamy's in that space, and we certainly think that there's more upside to come. In terms of NextDC, we pointed out last month that we added NextDC, or left NextDC in the list, because of the potential for index inclusion, the ASX 200 index inclusion. That catalyst has now come and gone. Obviously, it didn't make it into the ASX 200 index this time around, but the stock has pushed past our analyst price target. Certainly think there's a lot more growth left, particularly if the company can lock down a few cornerstone deals for its new data centers, then there is that upside to come. But for now, remove it off the high conviction list. We leave it on the watch list, and we'll look at it again in a number of months. They're the changes to our list this month. Please consult your advisor if you want a copy of that, or have a look at our website. Thank you very much.